Hello and welcome to another edition of Who Moves the Market. I am Surabhi Upadhyay. Well, this is one story where you have action, emotion, passion, drama, legalities, uncertainty, and whatnot. This is a saga that has been unfolding for well over a year. The stock that we will talk about today is Zee Entertainment. There are so many moving parts to this story between what's happening at SEBI, SAT, there are legalities pending at NCLT. The central question is, will the Zee-Sony deal go through or not? And what lies ahead for the stock? Joining me today to talk about some of these very interesting facets is Karan, who tracks the media landscape very, very closely. He's from Elara Capital. Karan, thanks for joining in. Great to have you on our digital show. You always do TV with us, but welcome to this digital special.
Hi, Surabhi. It's a pleasure to be here.
It's a sign of the times, right? We will talk about OTT and the prospects that some of these newer platforms are bringing to media companies. So why not digital? But, I just want to take a step back, Karan. I know you've maintained a pretty, positive view on Zee for the past many, many months. But isn't the plot really thickening a bit too much now? I mean, things are still pending. We know that SAT, Securities and Appellate Tribunal, is going to take up the plea now on the 26th of June, I believe. But, there is NCLT, there are allegations from the market regulator. There's so much going on. Aren't you worried about the future of the deal?
So, of course, Surabhi, a lot of uncertainties have developed over the last 3 weeks, since the SEBI announcement has come in. I think before this announcement came in, we kind of had a 90% plus kind of probability that, the merger will go through with Sony. But the probability has come down slightly because of, whatever allegations has been raised. They look to be pretty much, on the serious side. And NCLT hearings actually won't be possible, or outcome from NCLT rather will not be possible unless we see an outcome with SAT, right? Now, what we have to see here is that apparently we don't foresee a scenario wherein kind of SAT will go against SEBI or go in favor of Zee. At most, the relief that Zee can get right now is a stay order, right? And a stay order does not solve problems. I think stay order leads to further complications because there's a further delay in terms of how the merger pans out. Now, looking at the other scenario, of course, these are things which Sony would have definitely known in terms of due diligence. So it's like nothing new which is coming out. These are there in the books in FY20. So there's nothing new which is coming out. So that's some sort of a respite for investors as far as he is concerned. Second thing is that we also have to see in terms of how this merger really shapes up with or without Mr. Puneet Goenka. Because if the stay order is there and post that to get an outcome from SAT, you will require multiple hearings or probably going to Supreme Court. It could be a 3 month, 6 month kind of a delay for the merger, which has always seen a consistent delay over the last 2 years. So what exactly happens, basis that? So I mean, will he step aside and will the merger go through without him? That is a key model from here on. So certain media reports are giving us indication that, for Puneet, the merger is a priority and it may even go through without him. But what exactly will happen? How will things actually pan out? I think there are some mitigating uncertainties, and that is why I think the stock is also, been under pressure over the last couple of weeks.
Yeah, I mean, I take your point. There are so many unanswered questions over here, right? And this could turn at any given step. You mentioned that, this may still go on because Sony perhaps knew a lot of this. But I'm just throwing in one more possibility before we talk about more of the tangibles, which is the numbers. But Karan, here is a case where the market regulator is alleging fund siphoning. Now, it's only an interim order, and then it's we'll see whether they get a stay or not. But if there is if at all there is a chance that there is a forensic audit, or maybe the regulators or the courts feel that the books need to be relooked at to ensure the veracity and the sanctity of the books themselves, then could we be looking at a bigger blow to this possible merger?
Yes, of course. I think there are two parts to it. One is, of course, even if Puneet were to step aside, there could be something from SEBI wherein they would want to reassess this merger. if you remember clearly, NCLT also kind of, in the sense, one of the NCLT hearings about a month ago, they did, give an indication to SEBI if at all they want to, reassess the merger, to the exchanges. And that was supposed to happen. And then, Zee went to NCLAT and they got some relief against that as well. So you never know. I mean, because if this merger, if at all, has to be reassessed by the exchanges, it's going to be a long process, happen for it to happen. So it's not only about delay; it is also about reassessment and what comes out in the reassessment. Which could potentially, have a huge negative impact on the merger. So our current assessment is that, unless, this reassessment issue is not raised, and unless, SAT gives relief to Mr. Goenka in the form of a stay order, and if at all in a worst case scenario, a new CEO comes in either from Sony or anywhere externally as a backup plan, which, Sony would have thought of. I think the NCLT approval merger, the merger approval from the NCLT side could be a fast track process as compared to, reassessment, which is a far more longer process and also puts the merger at risk, in terms of the merger not going through at all.
Yeah, yeah, absolutely. I take all of your concerns on board, which is why we said that this is not for the faint-hearted. The reason we thought we'll bring in Karan is that the stock is at a very interesting juncture. Now, we know a lot of the risks and there are a ton of them out there, as we've just been discussing. But if we look at the stock price, and you'll have some of the data coming up for you, then from the peak when this deal was announced, when the stock used to trade at around 320, 330, today that stock has come down to 180 rupees. We're talking about a near 75-80% fall. And therefore, the question, Karan, for the brave hearts, I'm not talking about the risk-averse, sort of very prudent investors, but for the brave hearts, is there a case to look at Zee right now? Is there a case to buy Zee right now? I think your call is yes. You still have a buy rating on the stock, correct?
Yes, absolutely. I think we do have a buy rating on the stock, and the upside is quite steep. It's around 67% from the current share price. But the merger is the only big trigger. So I think if the merger is called off, if you look at core Zee as an entity, we don't see a potential of more than 900,000 crores kind of a PAT over the near term in terms of forward. And I think basis that the stock is trading at close to 17 times P. And if you exclude the merger from the story, I think there is a good 20-25% downside, that one can play for in a worst case scenario. So I think risk reward remains to be favorable, but the merger sureties or the probability is something which is kind of come down slightly over the last 2 to 3 weeks. I need to monitor events very closely to see how that pans out.
Got that. So let's do one thing, Karan. Let's leave aside the merger for just a second, because that is a binary event which we cannot predict. I mean, you with your best models also can't predict right now. Let's focus on the asset and the internal, strength of the asset, the Zee story, so to speak. And there I have questions, Karan, because we've been speaking about this. FY23 was not a great year for this company. There was a decline in the ad revenues in the fourth quarter. In fact, if I look at some of the numbers, I mean, even in terms of EBITDA margins, I think this company's come down. I mean, from 20 plus margins, it's down to some 13, 13 and a half. So it's been a very slippery slope. I mean, X of the merger as well. So what is happening with the business? It doesn't look like a very rosy picture.
Yeah, so we pointed out, that right, the business has seen a lot of pressure. There have been reasons, which have played out against them in FY23. I think most of those reasons are, one-off in nature. So let's start off first, with the advertising revenue. So I think advertising revenue, you have to give it that the market was challenging for the entire industry. A lot of new age commerce companies kind of cut ad spends. FMCG also was under pressure because of inflationary issues which were there. So advertising revenue has been subdued because of that. Then you've got the impact of movement of free to air. So Zee Anmol is a channel which moved free to air to pay, and that also had some sort of a negative impact, which is also more of a one-off. And this base we don't see that impact coming in F24. Third was, there was also a blackout, due to the fight with the MSOs because of NTO 3.0 implementation. And that also somewhere had a minor impact in terms of the annualized ad revenue. So if you look at all these things, I think these things look more of a one-off. And I think they should reverse back. So specifically talking about the environment, what we are seeing right now is that commerce has not come back strongly as it had over the last 1 year. But definitely FMCG, we expect these spends to pick up in H2 because of festive and because of new launches around the corner. So that should provide some respite in terms of the broader ad spends growth. And we have currently estimated a CAGR of about 8% in terms of Zee's advertising revenue for the next 2 years, which could potentially lead to better growth rates in terms of what they've been doing historically because of these reasons. Second big problem has been profitability, as you pointed out as well. So profitability has, come down sharply. In fact, if you look at the EBITDA margins from a pre-COVID basis versus right now, we've come to less than half, and the bigger reason for that has been the slow ad revenue growth because it's a operating leverage business. Better ad revenue, better subscription revenue flows down to EBITDA and leads to better margins. A second big reason has been, the ZEE5 content cost and the movie content cost, which comes below EBITDA and impacts PAT. But broadly talking about ZEE5, so currently ZEE5 is making about 1100 crores of losses as on FY23. And if you currently add that back, or if you assume that the OTT business is kind of break even, you will see EBITDA margins breaching 30% plus. So I don't think that this is completely reversible, but yeah, definitely the management has pointed out that in terms of the ZEE5 losses, they are reaching somewhere at the peak, and the losses should actually come down going ahead. So if that were the case, and if there is some improvement in terms of the ad revenue environment, you will see EBITDA margins, coming back towards the range of 18-20%, including the OTT losses that they would make even from here on.
Okay, so let's just break this down, Karan, because there are a lot of assumptions over here and it's a complex business. So let's just talk TV first and leave out ZEE5, which is the OTT platform. Now, on TV, what gives you, are you really confident about this 8% ad revenue growth? Because what we're seeing is that, advertisers are spoiled for choice and a lot of them are migrating, or at least partially migrating to the digital medium as well. So what's the forecast going forward in general? I mean, not just Zee, but in general. What's the forecast when it comes to ad revenue for traditional bread and butter television?
So I think if you look at the TV industry here specifically in the post-COVID era, in FY22, after we came out of COVID in terms of the broader base implication, TV revenues had recovered more towards 95% of pre-COVID levels, and that is industry and plus Zee as well. So 95 to 97% was the recovery rate for the industry. Then came FY23, wherein we saw disruption in the form of advertisers pulling back, FMCG, commerce, all these verticals, kind of struggling to kind of increase their ad spends. And then the recovery again came to 90%. So we did see a decline from FY22 to FY23. But one cannot forget the fact that TV is the only medium which has kind of maintained their share. So if you look at the broader ad revenue market share that TV has today, it has come down from a number of 37-39% range pre-COVID levels towards 34-35%. So I think TV is here to stay. It is very much resilient. It goes for mass campaigning. If you look at FMCG, which is the largest vertical in terms of ad spends, they actually spend very heavily on TV. So close to 45% of TV ad spends comes from FMCG vertical alone, and about 20% comes from commerce. So I think TV as a medium, we're going to see a threat at least for the next 3 to 5 years, because connected TV is a long way to go in terms of penetration. Fiber penetration is still very low in a country like India. ARPUs of fiber are still very high. Plus, digital and expensive proposition. So digital is not only about data and fiber connection and high speeds, but also about subscriptions. So if you look at the market right now, you have to pay for content. So if you just compare, TV ARPUs, which are close to 300 rupees on a monthly basis, digital ARPUs for a reasonable number of platforms, you would have to pay close to 1,500 rupees. And very sensitive market like India to drive scale on digital, drive connected TV base, we have still some time to go. So I think incrementally TV is not leading in terms of the ad share. They're not even growing, but they've kind of maintained that broader ad share of 34%.
Got it.
And I think I've mentioned about this 8% growth specifically for Zee, because I think Zee will outperform industry average because of a low base which is there. Excluding that steady state, I think TV industry growth rate should be in the range of 4 to 6%.
Okay, that's really comprehensive, and it gives us sort of a bird's eye view on TV. So basically, TV is not losing out too much, at the cost of digital. I guess advertisers are opening their purse strings even further. So there is incremental additional ad spending that's happening, which which is probably going towards the digital side, which now brings me to OTT in context of ZEE5. My God, Karan, 1,100 crores of losses. That's a gigantic number, right? So again, tell us about OTT, the landscape here, because you have a Jio that came out and was willing to offer free IPL content to people. Then there is content cost, as you're, as you pointed out earlier. What is your own profitability target for an entity like ZEE5?
So I think if you look at the OTT market, that is a very big concern. The overall market sizing today is around $2.5 billion, which is a mix of AVOD and SVOD. I think SVOD revenues are somewhere closer towards 60-65%. AVOD revenue is 65% rather, and SVOD is around 35%. Because India is price sensitive in nature, people don't pay much for content. ARPUs are low, and which is why advertising-led models, have a higher scale herein. Now, if you look at the pure economics of this business right now, nobody is making profit. I mean, none of the OTT platforms in the country today are making profit. Three reasons for the same. Content cost is very, very high. Distribution cost is also like a big challenge because most of these platforms don't have a customer base on their own. They have to go through partners like telcos and OEMs, wherein they have to give steep discounts on the low ARPUs that they have. Third thing is these businesses require huge investments around tech and user experience. So I think because of these three reasons, none of the platforms are making losses. And of course, at the top end, you've got ARPUs, which are substantially low as compared to global average ARPUs, which are there. So I don't foresee any company making profits in terms of OTT because of the market also being fragmented. So many players, such a heavy content cost which is there. But over the next 3 to 5 years, once the market evolves, once the market gets consolidated, once you see better ARPUs in the market, once you see content cost coming to a realistic level, distribution can become easier because of bargaining power will move towards OTT platforms and not towards telcos and OEMs. You will see many of these companies making profit. Now, as far as ZEE5 is concerned, I think 1,100 crores is a loss which they have generated. The big reason for that is content. So I think if you look at ZEE5 purely, they launch close to 80 to 100 shows every year, which are shows. So their content cost is, kind of very heavy on that front. Apart from that, they also make investments, into movie content, which is also very aggressively. They're chasing a lot of these Hindi movies, South movies put together from digital rights. So I think putting all these things in perspective, the larger chunk of the losses are because of content investment. And the second big reason is that the ARPUs are very low. So if you look at ZEE5 primarily, they are standing at an ARPU of close to 500-600 rupees in terms of an annual pack, as compared to other platforms, premium platforms, which are close to 1,500 plus.
Right.
So content cost being so high and ARPUs being so low,
that's the mismatch
for ZEE5. So I think for the next couple of years, these losses will continue. Of course, the losses can come down. It may not be sustainable, but the losses are here to stay unless you see consolidation in the market.
Okay, we have only now less than 60 seconds left on the conversation, Karan. ZEE5 will keep making losses for a few years. Zee, the core business, will grow ad revenue at maybe 8%, you said, but you're still optimistic. Go buy the stock, you're saying?
Yeah, I think one should, as I said, one should buy into the stock because the risk reward seems to be favorable. I mean, 26 June will give us more clarity in terms of where things are heading. But, there's a very low likelihood in terms of the merger being called off even now. So the probability still remains to 15-20%. So unless the probability goes high, unless something really negative happens, which is again C, or unless there's a big audit inquiry or something of that sort, because currently these are all hearsay statements. Unless there's an official statement, from Sony in terms of them wanting to call off merger or them wanting to have forensic audit, I don't think we should go with those kind of things.
Okay, all right. Thanks very much for joining in today, Karan. Good conversation. And we will keep talking to you because, as they say, picture abhi baki hai dost. The Zee story is definitely not over. Thank you for joining in and good catching up today.
Thank you, Surabhi.
All right, with that, we will wind up on this edition of Who Moved the Market. Hopefully you found that interesting, a complete, thorough lowdown on the media landscape with Zee in focus. We'll take your leave, but we'll see you tomorrow. Same time, same place with yet another market theme.